All right, what's up, guys? Option block here. Wanted to go over the option block here in the on Webull. I got this pulled up just as seeing the option block. I'm gonna minimize it here in a minute. We'll go into the chart, but this up here at the top is where you switch your how many day contracts that you want to trade in. So right now this is the October 20th contract. So this will be a 0 day contract in the morning. It means it's going to expire tomorrow. So if you like me, you like to trade breakouts. So you're going to look probably between this contract and this contract. Tomorrow is going to be Wednesday, so that's going to be midweek, and we will determine how much time we want to buy. I don't buy a lot of time in contracts because the more time that you buy, the more money that it's going to cost you. So we don't need all this time. And reason why I say I don't need all this time is because we trade breakouts and trends, support and resistance. So the main areas that we want to look at, okay, so these are my calls on the left side. These are my puts on the right side. The puts right here, this is what you consider out of the money in the puts. And this is the out of the money in the calls. Now the blue area here is what you call in the money. That means that the stock is above the current strike price. So you got like your strike price is right here in the middle. You got 441, 442, 443, all the way down to 450, and then it goes all the way up to 457. So here is your in the money in the puts, and then here's your out of money in the puts. But a lot of times we trade calls. We do trade against the market when we definitely see the reverse is coming, the market's going to be going down, but mostly we focus a lot on the calls. So right here in the center, you can see your strike price, your current stock price, which is right now it's at $450.64 right here on the current SPY. And so right here, 451 would be considered, it's out of the money, but it's what they call at the money. The stock could be currently about to go up above 451. So a lot of times we're trading at the money or in the money. We do not go far out of the money. My personal opinion, I don't go far out of the money. It's just a little bit too risky. But you trade your own risk. If you bought some time on it, and we know that we're on a 2-day gap up, and you know that we're going to possibly break some levels, then play it. But you play the options according to what's going on the chart, and you play the time according to what's going on the chart. So let me bring down the chart now. Okay, so right here, we have the daily on the SPY, and you can see that I had a trend going down. We hit some crazy moments here in the SPY, as you can see on the daily, but we had levels of resistance, and we paid attention to those, and we trade the SPY accordingly. And there was major moves, there was major money that could have been made right here on the SPY, and I put you guys on it. And then here I told you when we broke this trend here, you can see that we broke this trend. Now this trend, you can back this trend way up, and you can see that the all-time high is at 454. Okay, and I told you guys that we was coming down to the 200-day moving average, which we did. But as you can see, when we broke this trend, we had a big, huge green day. And I said, we got to break this 440, I think it was the 444 level, and we'll continue to have a few green days straight. And we did just that. We end up having not only 1, 2, 3, 4, but we've had 4 straight green days in a row. And we tested up the high at 450. Now, I'm expecting a little bit of pullback. We could gap back down here because the chart says it has to a little bit, because we are stretched out a little bit. But, we play these charts according to what's going on, based off the daily and so forth. So right now, right here in after hours, we hit a high of 451. So I'm gonna lock that down. But, come in the morning, we could expect, it said they're going to break up above 451. Are we going to wait to see if it's going to come down to 450? We're going to be patient and wait to see what's going to happen. And then we're going to start to get direction, and we're going to go into the options and buy the current strike price. Because, let's say if it comes down here to 449 and it's starting to reverse back up, right? Well, I'm going to go into the option block, okay, and I'm gonna go into the option block here, and I'm gonna say, okay, I'm gonna look for the 449. So 449 is right here. See, right now it's currently $233 a contract. But if it falls down to it and it becomes a little bit less out of the money, or it's right at the money, it's gonna be lesser than this $2.33, which represents, you times that by 100, that's $233. I imagine this thing would probably come down to about $130. So in the morning, if the SPY begins to dip down a little bit, we see it reversing because we're setting up our trend lines, we're setting up our support lines, we could pick up that contract, which tomorrow will be a 0-day contract. So, you want to be confident that it's definitely going to, dip down and reverse back up. But if you're not 100% sure and you want to buy you some more time, well, you could go to the 449 right here. See, it's a little bit higher. Right here, it's at 295. But if you was to wait for it to dip down and you want to, be safe and buy you some more time, this one would expire on October 22nd. So you would have 2 more days left in it. That would be ideal, because if you're for sure that we're going to continue to be on a bullish run, which we may, but we like to wait for confirmation, and that's what we're going to do. We're going to scoop this up and have a little bit more time on it. That would be the more wiser position to do. Now, of course, it would be a little bit cheaper than this because we're going to wait for it to dip down. So that would probably be around $180 a contract. And, it has the potential to come back up to $295. So that would be, a $100 profit. And if the chart would begin to break out and reverse, and next thing you know, we're getting above 452, 453, 454. Well, this is going to be deep in the money, and it's going to be way more worth than what it is. It probably almost triple. So, again, you don't need a lot of time on these contracts. 0 to 3 days is idea. And you want to buy where you're looking to break out at. So like, if the stock stayed steady and it didn't dip down, well, I'm probably looking to play the 454 tomorrow, because the 454 is going to be the all-time high. And if it begins to gap up in the morning and we're near that 454 right now, it's only 10 cents. I wouldn't buy it right now because I'm waiting. That would be crazy. I like to wait for confirmation. But you could probably get this one for under $100 when it starts nearing becoming more into the money, if we start getting close to 454. So I know that's a lot, but if you know how to read trend lines and you know how to read support and resistance, there's no difference in options. I got my volume right here, and that's all that I pay attention to. I pay attention to my strike price and my volume. Make sure we got enough people buying in it, which there's always going to be liquid in the SPY. There's a lot of people trading the SPY, so we're always going to have, liquid in this thing. So, but I hope that just kind of gives you an idea and can help you when it comes to trading options. And I'll do some more of these videos out, guys. I just wanted to throw this together real quick.